All right, good morning, everybody. My name is Colin Burks. I'm a senior health specialist here at Art Jetter and Company. I want to thank you all for joining this morning as we dive into the differences between Medicare Advantage and Medicare Supplement. In a moment, I will hand it over to Courtney and Gabe. But first, I want to remind everyone to take advantage of our AHIP reimbursement program. Stick around until the end if you have any questions, and we'll get those answered for you. We will pause periodically if we have any questions on the material at hand. With that being said, I will hand it over to Courtney and Gabe, and thank you guys for being here.
All right, good morning, everyone. Courtney, I wasn't sure if you wanted to say hello to everyone. My name is Gabe Moore. I'm the Broker Relationship Manager for Humana here in the Dallas-Fort Worth Metroplex. Really appreciate your time and valuable time in carving out a solid hour of your time today to learn more about basically how to get better. The goal of this presentation is just to hopefully, all of you will be able to walk away with one nugget, something that you can make your own, what I like to refer to as Monday morning relevance, something that you can make your own, just where if you had an appointment this afternoon, you can use. So I encourage you to make a lot of the strategies in here your own, or just copy it. That's what this is for. We at Humana want to help all of you be better. And of course, with a lot more Humana green and white sprinkled in your book of business. But the ultimate goal is today is not really why Humana. It's really learning how to strategize with your client on what plan might suit them best. And so we're going to talk through a lot of strategies. Some of this is going to be basic for some of you veteran agents out there. So just wait a few slides. We're going to dig deep and really get our heels in the sand here, and we might get lost in the weeds a little bit, but encourage you to post in the chat if you have any questions. We'll address them at the end. Encourage you to contact myself or Courtney or any of your leadership with your FMO as well. All right, that's myself and Miss Courtney Stowe. Courtney, you want to say hello to everyone?
I'd love to. Thanks, Gabe. So thank you all for being here with us. There's our contact information. I work very closely also with Art Jetter and Company. So anything you need from us or from them, we will always work together to make sure that we get those needs solved. So thank you, Gabe, especially for being on and delivering this presentation for us all today.
You got it. You're very welcome. All right. Before we begin, contact Art Jetter and Company for the recording of this presentation. Visit the handout section of your control panel for materials, and please ask questions or post some best practices out there. Maybe if you want to post some of the things that you've done, we're all in this together, and the goal of this presentation is to really make sure that we, as representatives of Medicare products, are on the same page when we're interacting with our prospective clients out there. A little bit on the agenda. We're going to talk about some factors for success, kind of where the strategy that you're going to hear me talk about today came from and where it's been, and kind of how it's evolved through the last probably 12 years. A little bit about the Medicare opportunity, some Medicare Advantage basics, Medicare Supplement guarantee issue versus open enrollment, some sales strategies, plan information, of course, some closing discussion. Some factors for success. I'll just be blunt in saying this. If you're not genuinely curious in other people, you probably shouldn't be in sales, right? So a genuine curiosity, think about when you're interacting with folks and how much you like to get to know folks out there, not just for the ultimate goal of making a sale, right? So that does go a long way. Continue to understand the why behind decisions people make. And so with that, I would like for you, if you're taking notes, I want you to write down four things. If you were turning 65, or maybe you might be 65 now, if you were turning 65 and the only option available to you in your county was a Medicare Advantage plan, what would you go with, an HMO or PPO? The second thing I'd like for you to write down is, if you were Medicare eligible, what plan would you absolutely not write yourself on, HMO or PPO? Same thing with Medicare supplements. What I want you to write down is the Medicare supplement that you would absolutely write yourself on, and the Medicare supplement you absolutely would not write yourself on. Okay? We're going to reflect on that as we go through this presentation, because it's going to help you when you're out there interacting with folks who may want a plan that you absolutely would not write yourself on, but it is in their best interest, right? So we're going to talk about positioning that and kind of, reflecting on ourselves a little bit. I personally believe that we educate too much in this industry. I believe it's more of a strategic approach versus an educational approach. I don't think it's a teacher-student type scenario. I think it's more of a strategic scenario where you're going to, go through a journey with your prospective client on what their options are, and really strategize with them. We're going to talk a little bit more about how that plays into this approach. And again, know your why and why not plans, and the reason why people would choose the plans you wouldn't want personally, and the reason why people would want your plans, or why they wouldn't want the plan that you would choose personally. Okay. All right, these next two slides, I was told by our training department to keep here. You're going to hear me say I and me a lot throughout this presentation, because this was built on my approach and why it was so successful. Okay, and it always helps whenever you are learning a new sales strategy, regardless of what you're trying to sell, whether it's selling homes, selling cars, whatever you're selling. If you're learning a new sales strategy, it helps to know that the presenter or the information being presented is actually proven to be successful. So a little bit about me and kind of how this deck came to pass. I started with Humana back in 2007. My very first insurance job. Back then, they sent us off to what's referred to as CERT school, certification school, where we were in Louisville, Kentucky for 3 weeks away from our family, learning everything about Medicare, mostly on the Medicare Advantage side. When we left that certification school back then, we were compliant Medicare Advantage machines, okay? But what I learned very quickly was I didn't know how to overcome a lot of the objections I was hearing out there. The old Plan J, Plan F. I was running into those prospects who had supplements, and I really wasn't familiar with supplements. What I did, I went home, and could be a homework assignment for all of you if you'd like. Sit down and open up Medicare supplement outline of coverage, regardless of who it is, any carrier. What I want you to do is write down every plan and the reason why you would choose that plan and the reason why you wouldn't choose that plan. And that's what I did. I wrote down every single plan and really self-reflected. It took me about an hour to really think about why I would want that plan and why I wouldn't want that plan. Very quickly, I climbed the ladder and ended up selling more of both. I was actually, after being able to overcome those objections, the referrals were coming in like crazy because people understood that I'm not pushing one or the other. It was really a strategic approach in that I'm helping them kind of understand both sides of the equation. And really, as simple as it sounds, a lot of folks don't know how they want to manage their medical expenses, and that's we're going to touch on that a little bit more as we go through this as well. So first, AEP, I had 227 total Medicare products. Consistent market leader throughout my career on MedSups and Medicare Advantage, and was a 7-time President's Club winner in Region 5 for Good Year a long time ago. So not to, I guess, talk a little bit more about my success. It really does speak to, and these strategies speak to that success. All right. So kind of the evolution of this deck, back in 2008, when I was a captive agent with Humana, I was asked by my director to teach and educate agents on how to sell MedSups because we were really strong Medicare Advantage, right? I was promoted to market manager in San Antonio, where I traveled the country to several markets. Actually, a DVD was created. If you could find one of those DVDs, I'd be happy to autograph it for you. I don't know that I would want to watch it, but it was kind of a cool situation. Fast forward to 2018, I was promoted to broker relationship manager here at DFW, and I quickly learned that there were a lot of agencies that were heavy MedSup producers. In fact, some of them were selling against Medicare Advantage, and that is not the approach we want to take. We don't want to sell against one or the other. Okay, we want to make sure we have a balanced approach. And what happened was a lot of those agencies have, even to this day, have continued to improve or become leaders in the Medicare Advantage space. So again, rethinking routine, how can we support agents differently? We want to create that continuity and consistency across the board with everyone, right? Regardless of what you are presenting. All right, enough about me. On to the Medicare opportunity. So back in 2018, Deft Research did a study for agents. Look at the percentages there. Those that were turning 65, and this is across the board among all carriers. 42% were choosing Medicare Advantage, 45% MedSup, and 13% with original Medicare only. Fast forward to 2021, I'm looking forward to getting the 2022 study, but check out how it's kind of shifted a little bit more to the Medicare Advantage side, right? I believe there's always going to be a need for MedSups. This is why we're having this conversation today, right? So this is why it's very important to have both of these options in your back pocket for your prospective clients. 1960 was a very busy year for hospitals, the busiest year for the baby boomer population. 2025 is going to be the peak. We're averaging right around 11,000 folks turning 65 now. That will continue to climb as we hit 2025, and then continue to hover around that 10,000 per day mark. So it's very important that there's a lot of meat on the bone. There's a lot of opportunity out there. So feel free to share your successes as well and what's made you successful in the chat if you'd like. All right. This is why it's very important to be balanced. We try to read that statement and kind of soak it in a little bit. I was really disillusioned. It left a bad taste in my mouth for brokers. What do y'all think that's referring to? That was actually a quote. I'm sorry, a quote that was taken from one of our members. I wasn't in the appointment. I don't know the details of the appointment, but what ended up happening was this particular client met with someone. He was turning 65. He met with a broker that only presented MedSups. And together they concluded that whatever MedSup was good, that's what he wanted. And they concluded that Humana prescription drug plan was best suited for him. And he said, here, call Humana and set up an appointment for a prescription drug plan. Well, the agent showed up, whether it was a captive agent or independent agent. I don't know, and I don't think it matters. But what ended up happening was, if he was anything like me or she was anything like the way I did it, he probably asked, is there a reason why you didn't choose a Medicare Advantage plan? And the guy probably scratched his head and said, what is that? How many of you have encountered that situation? How often does that happen with you, right? And it does happen more, I'll probably say less today than in times past. But what ended up happening was that guy ended up switching to a Medicare Advantage plan. And check out that research. When a broker only presents a MedSup option, the switcher bought a Medicare Advantage from a different broker 70% of the time. That's insane. 7 out of 10 times. Now, I would love to know the flip side of that. I'd like to know the reverse. If the broker only presents Medicare Advantage, how often is a switcher moving to a MedSup, right? So we're going to walk a nice tightrope today. If you hear me favoring one or the other, just wait a slide or two, okay? This is not about taking someone off a MedSup and putting them into a Medicare Advantage plan or vice versa. This is understanding both sides of the equation so that you can maybe overcome some of those objections that you're hearing out there and assist and strategize with your client the best route for them. The bottom line is, whether MAPD or MedSup, sometimes prospects have already jumped to conclusions based on hearsay through social media. I'd say, don't get me started on social media. Social media is probably the detriment of society, unfortunately. But there's a lot of hearsay out there. There's a lot of misinformation out there floating around on the internet and on social media, and of course with friends and relatives, even nurses sometimes, right? Diplomatically overcoming those objections is our job. That's what we're here for, right? We are that strategic advisor for our Medicare population. All right, so again, some of this stuff is going to be a little basic for some of the veteran agents out there, but I want to make sure we cover some of this stuff. It's always good to go back to the basics. How many of you sat into an appointment? How many have you been sitting in an appointment and you look up all the doctors, and rocking and rolling, we're good to go. We're going to open up the summary of benefits, and you start going through the Medicare Advantage summary of benefits, and the third or fourth line item down is the max out of pocket. And your prospective client sits back, crosses their arms, and says, I can't afford that if I go to the hospital. How often does that happen to y'all? I know I can't see a show of hands, but more often than not, that happens. So what I would encourage all of you to do, I'm going to ask you this question and kind of go into this, the importance of this. How many times when you're driving down the highway, you're going 70 miles an hour, and you need to switch lanes, put your blinker on, how many times do you look over in your blind spot? Hopefully 110% of the time, right? Well, we should be explaining the max out of pocket 110% of the time. We can't assume that they know what that is, because when they see that big number, most of the time, they're correlating that with a deductible. And that's altogether completely different than a deductible, right? What I would always used to say is, Ms. Smith, the old adage with Medicare Advantage plans is, you know exactly what you owe when you go, and you never owe a dime more than the copay that shows. For example, Ms. Smith, on this next line item, you're going to see a hospital copay. On this plan, it's say $250 a day for the first 5 days, and after that, it's zero. If you go to the hospital for 2 days and run up thousands of dollars in medical expenses, all you owe is $500, which is $250 times 2, right? So that kind of puts them at ease. So always explain that. Don't assume. In fact, I just talked to an agent about 3 weeks ago. She's only been in business for about 2 years. She said, Gabe, these deductibles in the Medicare Advantage plans, I just don't see how I can position them with these deductibles. And I said, oh my gosh. I said, okay, let's back up a little bit. So I had to explain to her what that was, and it really opened up her eyes and helped her a little bit. So always explain that max out of pocket. Medicare Advantage plans trap you in a network. Well, if you think about it a little bit, and so these are some of the things that I heard out there as an agent, probably some of the things that you're hearing out there as agents. Let's think about this. Let's unpack that for a little bit. With Humana's PPO, it's a nationwide network. It's built on one nationwide network. So if you've got a client that lives in Iowa and has Humana's PPO, and they want to come to Texas and get a second opinion or see other doctors in Texas, those doctors are in there. They're going to pick a little. Someone have a question? Okay. Got an echo here. Stuttering. Echo. I'm not sure where it's coming from.
Hey, Gabe, I think it's echoing.
Yes. It just started. Okay. So if we unpack that a little bit, if you're looking at the PPO, they have one national network. And oh, by the way, emergency worldwide, if you have an emergency and something happens to you, treat it as if you were in, regardless of go to hospital, right? That goes the same HMO. With an HMO, however, you are technically in a network in that local area. But we can't get too caught up in that. How traveling, this is something that we share with my clients. How often are we traveling or on vacation? And
hold on a second, Gabe. You're echoing pretty bad here.
Yeah. Not sure what's going on.
Are you muted on your computer?
No. I just muted just to see if that would help.
Try that again.
Is that better?
That sounds much better.
Okay, I just noticed my audio had switched to computer audio for some reason. Not sure how that happened. All right, back on track.
Sounds great now.
Is that better?
Perfect. Thank you, Gabe.
You bet. So if you're hearing these objections, trap you in a network. Oh my gosh, I have to have a referral. Well, with an HMO, Technically, you do the first time you see a provider, right? But most of the time, regardless of what you have, I'd probably say most of the time, whether it's a med sup or a PPO, a lot of times when folks go see a doctor, and that doctor says, you need to see a cardiologist, what typically happens? Typically, we lean forward and say, all right, doc, where are you sending it, all right? Or, hey, I've already set up your referral to see XYZ cardiologist. So most of the time, people don't go home and search for a cardiologist on their own. So overcoming that objection, if the HMO has got a really strong value prop in your area or in the place that you're selling, that's a big one. Most of the time, folks don't see doctors for diagnostic services outside of their service area. If it's an emergency, of course it's covered. Worldwide coverage on our plans. Copays aren't budget friendly. Well, it depends on what plan. I'd probably say our plans are, at least here in DFW and maybe all over the country, we have plans to choose from that really are nice with the budget. Medicare Advantage plans are cheaper, therefore you lose benefits. We all know that's not true. So understanding how to overcome that is important, right? Medicare sets aside a certain dollar amount every month for every Medicare beneficiary out there. When someone signs up for a Medicare Advantage plan, that dollar amount is given to the Medicare Advantage plan company to manage those expenses, right, above and beyond any copays that show. I don't want a plan that requires referrals. Well, more than likely, again, specialists tend to want referrals more so than not. A cardiologist doesn't want someone showing up for potential heart problems when in reality it's just acid reflux, right? So they tend to like referrals a little bit more, whether it's an HMO or a PPO or a med sup. And these last two statements, I cringe every time I read them on this presentation many times. This particular, and I wish I would have kept the article. This was taken from an article written in the 4-Star Telegram, I'd probably say the better part of 6 years ago. And I took these two statements out of that article. And it frustrated me because we as representatives of Medicare products, cannot silo plans based on someone's income, based on someone's house size, based on someone's health issues, right? We can't. We can't walk into a 10,000 square foot house and only bring in our med sup information. So we got to make sure we walk in with an open mind and help those folks understand I've got clients, I had clients that were chronically ill that thrived on Medicare Advantage plans. I've got clients that were Part D LIS that love med sups. And more often than not, folks that have Part D LIS or limited income like that, they actually like med sups because it's more predictable out-of-pocket cost, right? So it doesn't hurt if you walk into that single-wide trailer where the doors barely hanging on the hinges, right? To not automatically assume that this is going to be a Medicare Advantage appointment. All right, Medicare supplements, a little bit about Humana's Medicare supplements and kind of the industry projection. You see here a lot of growth over the next 9 or so years. You're looking here at Medicare beneficiaries, the number of Medicare beneficiaries in 2031 is going to grow to 78 million. 18 million of those are going to be med sup lives, which they're projecting, and $54 billion in med sup premium. It's important to understand how to position, which is what we're going to go over here in the next 2 slides. A little bit more about med sups, as we know, no copays, predictable costs on most plans. Don't have a copay depending on what you got, what you have planned in. We're going to go over a little bit more. We're going to unpack all of these here a little bit over the next few slides. And this third one down, I don't like, let's see, where's it at? Network restrictions. It's important to make sure that if someone wants a med sup, that we're not saying you can go see any doctor. Any doctor that accepts Medicare, original Medicare, right? So there are some doctors, there are some clinics, at least here in Texas, that only accept Medicare Advantage plans. They don't accept original Medicare in a supplement, right? So if they want a med sup, make sure we're looking up doctors and making those right phone calls. So Humana is investing a lot into our med sups. If you take a look at our membership, 94% of our membership has a Medicare Advantage plan. Only 6% has a med sub. So you're going to see a lot of changes over the next few months. In fact, we've already started with a lot of changes this year with our new med sub president, Fred Roth. He's making some changes that are going to be beneficial for our med sub side. All right, these two terms are way too often interchanged and used incorrectly. So we're going to outline open enrollment versus guarantee issue when it comes to med subs. Okay? The reason why this is important, and this should go without saying, we don't sell a plan because we're going to get paid more on it. That should not be the position we take. But knowing the difference between these two is going to help you know what you're paid. Most of the time, open enrollment and underwritten policies are paid more in your commission versus your guarantee issue cases, right? Guarantee issue cases are typically a lot less. So if you're looking at your commission statement every month or every week, however often you're looking at it, and you're writing those med subs, make sure you know what you're going to get paid. So med sub open enrollment period begins on the first day of the Part B effective date and continues for 6 months. So they can change to any other plan in those 6 months. There's no underwriting involved. Age-ins also include those who qualified for Medicare prior to 65. So if they were on Medicare due to disability, they turned 65, now it's their open enrollment for med sub. And they can choose any of the med subs out there that they want, but any underwriting. And the reason why these two terms are interchanged way too often is because technically, yes, there's no health questions asked on an open enrollment case, so it's quote guaranteed that they're going to get it, right? But we can't interchange those when we're communicating with the carrier. Guarantee issue is typically tied to an SCP, but pay attention to that Part B effective date. For example, if someone is 70 years old, say Mr. Smith is 70 years old, and he has worked for the last 5 years, he's had employer group coverage for the last 5 years, and all he took out was Part A. He's retiring, loses employer coverage, gets his Part B effective July 1st of this year. He's in his open enrollment period for med sub. However, if Mr. Smith took Part B when he first turned 65, he's had A and B and an employer-based coverage, and he retires, losing employer coverage, that's a guarantee issue case because he's had his Part B longer than 6 months, obviously, right? So pay attention to the Part B effective date. I don't have any data to support this, but loss of employer coverage is probably the most common guarantee issue situation. Again, pay attention to Part B effective date, though. Loss of Medicaid status. So anytime someone, and of course, there's a lot of Medicaid redetermination going on out there, right? So if someone loses Medicaid due to income, they're guaranteed issue a med sub. The reason why I bring that up is because that happened to me on I'd probably say a handful of times. Did their income increase thousands of dollars per month? No. It just went up maybe $500, for example, per month, but they really liked that expected out-of-pocket costs. Plan exit. Anytime a plan leaves an area, anytime a Medicare Advantage plan leaves an area, so they pull up and leave, they're gone, you're guaranteed issue a med sub. Move outside the Medicare Advantage coverage area. And this could be state to state when they cross state lines, or it could be county to county. For example, here in Texas, I live in a county called Parker County. If someone lives in Tarrant County, which is more the Fort Worth side, they can have the HMO, the Humana HMO. But if they move to Parker County, they're losing the HMO. They cannot have the HMO here in Parker County. So it's an involuntary loss of coverage. Another guaranteed issue a med sub. 12-month trial period on a Medicare Advantage plan. I'm not big on saying any, all, or ever, but I'll say with confidence, 100% confidence, at least here in Texas. I can't speak to other states, and this is, I'd probably say across the board a rule, but I don't know state rules, all the state rules, but anytime someone tries a Medicare Advantage plan out for the very first time, they have a 12-month guarantee issue to get a med sub. Pay attention to Part B effective. So for example, if someone turns 65 in July of this year, you write them on a Medicare Advantage plan effective July 1st. 3 months later, Ms. Smith calls and says, I'm not happy. Whatever the case may be. Know that she is still in her open enrollment period for MedSup because she's within those 6 months. Or if it's been, say, 10 months, say February of next year or March of next year, she calls you and says, I'm not happy. Know that at that point, because after 6 months, she's a guarantee issue status on her Medicare supplement. She can still get it because she's still within those 12 months. So it's not just if someone drops. Now let's go to that. So if someone drops a Medicare supplement to try a Medicare Advantage plan out for the very first time, say they were 70 years old, I'll use 70 again as an example. They have a 1-year guarantee to go back to that same supplement with the same company. Okay, so there's a couple moving parts there. Now, if they don't want to go back to the same company, because maybe they were paying too much, or they didn't like that company, or maybe Humana has better rates, they can go back, they can get a Medicare supplement within those first 12 months, but now there's underwriting involved. If they don't go to the same plan, same company. So if they drop a supplement to get a Medicare Advantage plan, and they need a guarantee issue because of health issues or what have you, you don't think they'll qualify for underwriting, they have to go back to the same company, same policy. Okay. So it's two different examples of the 12-month rule there on Medicare Advantage plans and MedSups. Most voluntary or involuntary loss of coverage qualify for either open enrollment or guarantee issue. Just pay attention to that Part B effective date, and this information here will help you turn on a dime in an appointment. You may be sitting in front of someone who just lost their Medicaid status, and all you bring out is the Medicare Advantage plans because now they have an SEP, and they don't like the copays on the Medicare Advantage plan, or whatever, because they've never had copays, right, on Medicaid. There's nothing wrong with pulling out a MedSup. Show them the G or show them an N, right? We're going to dig a little bit more in the individual MedSups here in a little bit. All right, MedSup advantages and disadvantages. You do have a network. You have to go to places that accept original Medicare, right? Not just anywhere. Financial exposure is lessened. We're going to do some math here on the next, I think it's the next slide, maybe the next couple slides, we'll show you some math. But only in a bad year, really bad year, year over year, right? It is a very easy transition into Medicare. You don't have to look up doctors for the most part. Okay? If you're here in DFW, you probably want to take a look at the doctors because there are some clinics here that only accept original Medicare. But it is easy in that regard, in that you don't have to look up all their doctors for the most part. More flexibility in the future. So I'm going to pause here and unpack that statement for a second. Anytime someone, so as an agent, if I had been sitting in front of someone for an hour and a half and we're turning 65, and we have one of those folks that have, and I love these appointments where you walk in and on the kitchen table is a Medicare new handbook, and they've got highlights and underlines and pages marked, and we've gone through everything. And we're at the conclusion of the appointment. My prospective client didn't know if they wanted the Medicare Advantage plan or the Medicare supplement. We had it narrowed down to one of each. I knew we could probably figure it out, and I would always say this. It was quite surprising what would happen. I'd say, Ms. Smith, I actually do prefer when someone chooses a Medicare supplement when they first become Medicare eligible, because it gives you more flexibility in the future. Here's what I mean. Say, for example, if you choose a Medicare supplement now, effective July 1st, in 3 years, 5 years, 10 years down the road, you want a Medicare Advantage plan. Well, you can always get a Medicare Advantage plan. There's no underwriting involved. You do have to wait until the annual enrollment period. But you can get that Medicare Advantage plan and have a 12-month guarantee to go back to that same plan if you don't like it. Whereas if you choose a Medicare Advantage plan, this Medicare Advantage plan here, effective July 1st, and more than 1 year passes, say 2 years, 5 years down the road, 10 years down the road, you want a Medicare supplement, and now there's underwriting involved. And you may or may not qualify. It depends on your health. Now, I do have clients that are in their 80s that did qualify, that have qualified for med subs. So not a scare tactic. Just want to kind of be open with you and transparent and help you understand kind of what's going on here. And I would probably say it surprised me. At least half of the time, a prospect would choose a Medicare Advantage plan, even after I would share that with them. And in retrospect, as I think about it, with that audience, right? And it's not every audience you're going to be getting this nitty-gritty in it, but in retrospect, I think it's because I demonstrated an ability and competency when it comes to what she can do or what my client can do in the future. I demonstrated that professionalism and understanding what her options are in the future. So it was really surprising that they would, and it helped it helped most of the time. I'd say 90% of the time, it would seal the deal. If they came down to, they didn't know what they wanted, I would say that, and it would either be Med Sup or I'd say more often than not Medicare Advantage. Premiums do increase year over year. Humana does have historically lower rate increases year over year than other carriers. It's very important to remember. We're going to go over that here in a second. Premium is often more than 20% of a provider visit. We're going to go over that a little bit more as we go through the slides. But 20% of a doctor office visit. What's the Medicare limiting charge on a doctor office visit? Might be, I think it's between $60 and $80. So 20% of $80 is $16. You just sent the insurance company $200 to pay a $16 bill. And sometimes your clients who have those med subs, they'll pull out the summary on what on what Medicare paid and what the supplement paid. You got to pay every month, even if no visit, right? It's reactive, not proactive. Medicare is primary, and it's not insurance. Med subs aren't insurance. It's just a financial arm. If Medicare pays, the supplement company pays. In my professional opinion, the only way, if you're sitting in front of someone who has their toes in the water on a Medicare Advantage plan, and they're 75 years old, it's a husband, wife, 75 years old, they've had Plan F for 10 years, and they're paying, let's just call it $500 a month, whatever number you want to use. Let's use 500 for even number purposes. They have their toes in the water on a Medicare Advantage plan because they've heard their neighbor has it or whoever has it, but they're just not sure. They're almost looking for a reason not to enroll in a Medicare Advantage plan because they've had their supplements for so long, right? So you want to be sensitive in that respect, right? And so the only way to compare is to say, look, Ms. Smith, Mr. Smith, I've looked up all your doctors. They're all in Humana's PPO network. It's a $0 premium. Right now you're paying $500 a month, every single month. That's $6,000 a year. So I'm not good at predicting the future, Mr. Smith, but I can tell you that next year you're going to have $6,000 in copays on your current plan. You're going to say, wait a minute, I don't have copays. So the only way to compare a copay plan to a non-copay plan is to take the difference of the premium in addition to the Part D premium and say, look, I'm going to take you through the summary of benefits. The more you can share with me, the better I can help you. I can't ask you any health questions. So the more you can share, the better we can kind of strategize to see if it's going to be a good fit for you. What I want you to think about, are you going to spend, or are you and your wife going to spend $500 every single month in copays on this plan? So I'm going to take you through these copays. So we're going to go through all the summary benefits. And so sometimes, more often than not, $500 is a lot of money to spend in copays on a Medicare Advantage plan, but some of those folks just like the peace of mind, knowing that all they owe is $500 a month, right? So this slide was a slide that I created for those really heavy med sup agencies. And I felt like I was in the hot seat, especially on this slide, because, I love med subs, but you got to know the flip side of it. So let's do some math. And I did some quick math with them, and I don't have data to support the average. I just did even numbers here. So 5 years of Plan G on average, because of the increase year over year, we have $150 a month, $25 a month, $25 a month through Part D, $175 a month. So if you look at the math down there, over the course of 1 year you're paying $2,100 a year. If you're a couple, now of course I didn't do the math because males premiums are more expensive than females, so I didn't do that. I just kept everything even. $4,200 a year in premium. $10,500 in premiums over the course of 5 years, or $21,000 in 5 years in premiums that you have to spend in quote copays, right? $42,000 you're paying out in 10 years in premiums, or $21,000 on a Plan G, and that's just at an average of $175 a month. So sometimes you're going to get pushback. And, if you're talking through with them, I would always say, look, you're paying this per month. Let's talk about it a little bit. Humana has supplements as well, so I'm happy to quote you on less expensive supplements. But I know you're interested in this Medicare Advantage plan, so let's talk a little bit more about that. If you enroll into this Medicare Advantage plan, and as of January 1st, you act like you kept your current plan. Act like nothing changed financially. Go to your bank and open up a separate checking account. Use that for your copays. Deposit what you're spending now on your copays. And if after 6 months, 8 months, we have a hard time keeping up with the difference, give me a call. Remember, because we have a 12-month guarantee to go back to your same plan. More often than not, folks did that. It was crazy. I said, look, I'm not a financial advisor by any stretch of the imagination, but if you're concerned with the copays, let's talk a little bit more. Let's unpack that a little bit more. Let's see what they're concerned about. Walk through maybe a fake year with them if you wanted to. If you were to go to the hospital, this is how much you would owe, right, on a Medicare Advantage plan. So these are some of the quotes that I would say throughout presentations with folks that had their toes in the water. Maybe they were right there and it's hard to make a change. And so what if you had $10,000 right now to deposit to account to use solely towards copays over the next 5 years on a Medicare Advantage plan? What if you acted like you purchased a Plan G and instead saved the difference with the copays? So it's either has to go or it might, Ms. Smith. We know for a fact that you're going to spend this on a Medicare supplement, but what we don't know on the Medicare Advantage side is what you're going to spend in copays every single month. And I always say, there's a possibility, Ms. Smith, knock on wood, there's going to be that possibility that you owe $150 for whatever on a Medicare Advantage plan. You're going to snap your fingers and say, dang it, why didn't I keep my Medicare supplement? But look at the big picture. This is what you're going to be spending over the next year, 2 years, 5 years based on, and we're not even including the year-over-year increase, right? The 2.5%, 3%, some carriers have a 5 and 6% year-over-year increase in premiums. Just some things to kind of keep in mind as you're softly being diplomatic with your clients, right? And it's not just about taking them off a med sub. It's also about saving them some money because they're meeting with you for a reason. So it could be they go with the high deductible Plan G or Plan N. Maybe they've had Plan F for a long time. So always keep those options in mind. So Plan F and G disadvantages, they have, quote, copays. You're going to scratch their head and say, I don't have copays, but when you're comparing it to a Medicare Advantage plan, you do, right? It might be that month or two, but not every month. Peace of mind, you're max out of pocket for premium. So I've got clients, even to this day, I don't write Medicare anymore, but there's still some clients on my book that have med subs that have Plan F that never go to the doctor. And they're spending a ton of money, and they just love the peace of mind that all they're ever going to owe is their premium on Plan F. High deductible Plan G is probably the most overlooked supplement, in my opinion, out there. It's undermarketed and overlooked by agents and prospects alike. And in my opinion, this is my personal favorite plan. I sold a lot of this. Back then it was called High Deductible Plan F. It's the same plan. High Deductible Plan G is the same plan. Why aren't people choosing or looking at this? The name. It's not a very attractive name. High Deductible Plan G, that just doesn't sound good at all, right? So it's very important to explain and define what a deductible is first. You know, Ms. Smith, a deductible. What's a deductible? A deductible is defined as what? You're responsible for 100% of what the insurance company doesn't pay until you meet that said number, right? Well, with this, in Medicare, it's a whole other ballgame. The reason why they call this a deductible is because you're responsible for 100% of what Medicare doesn't pay. So 20%. The Part B deductible, 20%, 20%, 20%, until or if you get to that number, which is $2,700. So you're not going to owe 100% of all of your expenses. You're going to owe 20%. So the Part B deductible goes against $2,700. So if you're hospitalized, the Part A deductible goes against that. Pretty much if you're hospitalized, you're going to owe what you have left over on your deductible, if any, and then you're done for the year. $2,700 is, I like to refer to it as kind of a max out of pocket if you think about it that way, because the insurance company is paying, but technically not, right? If you think about it. But this is a great fallback option. Say you're sitting in front of someone and you're looking up all their doctors. You're betting 1,000 on all their doctors. They're looking good. Look up the cardiologist, and that one cardiologist that saved their life only accepts original Medicare. Doesn't accept anybody. Oh shoot, what do I do now? The client loves a Medicare Advantage plan, loves the way that the pay-as-you-go type option. This is a great fallback option. There's nothing wrong. These plans are, at least here in Texas, $50 a month, relatively low premium, and relatively low worst case scenario. So not a bad plan. More often than not, folks are retiring with HSAs. They can use that HSA money to pay that 20% until or if they get to that $2,700. Now, for you math nerds, I didn't do exact math. $10,000 in medical expenses-ish to get to $2,700, right? So all they owe at a rate of 20% is $2,700. So disadvantages, I got the Part B deductible. Medicare's the only payer. You're basically just buying a max out of pocket or a roof over your head or a safety net, however you want to look at it. And it's $2,700 is lower than most max out of pockets on Medicare Advantage plans, right? You're tied to a low premium. It's a pay-as-you-go type mentality. Not a true deductible in a sense, right? Kind of, sort of, but not really. I get twisted up on that all the time. All right. So explain the deductible first, and then explain the plan. And you'd be surprised at the number of folks who would gravitate to that plan. Plan N, Part B deductible. The plan has real copays, $20, right? No max out of pocket though. And a potential Part B excess charge of up to 15%. Peace of mind, max copay is $20 for anything outpatient, $50 for ER. And some of my clients tell me, so Gabe, after I met my Part B deductible, my PCP isn't charging me anything. I thought you said $20. I said, remember, up to $20, right? So sometimes they don't even charge them $20. All right. So these next two slides are kind of fun. So let's just say if you're sitting in front of someone and we've sold them a plan, a supplement, right? And we want to make sure we have some feel goods. All right, we're opening up the application, we're starting the application, we're just doing some small talk. And so, and I would always refer to my clients. Ms. Smith, my clients that love Plan G, all they owe is the first $226 out of pocket, and then you're covered 100% for the rest of the year. That's what you like about it. I think this is what we want to do. I really love this plan because all you owe is $226, right? High-level Plan G. The reason my clients love this plan, Ms. Smith, is because you're tied to a low premium and a relatively low worst-case scenario, right? Remember, all you owe is what Medicare doesn't pay. Get you signed up. Plan F. What my clients love about Plan F, Ms. Smith, is that all you owe is that premium. That's it. And regardless of how many times you go see a provider, all you owe is a premium. Plan N, low premium, budget-friendly outpatient copays, and most you're going to owe is $20. With a potential excess charge, it doesn't happen very often, but you could be charged up to 15% and excess charges. Downside, so if someone's coming off of one of those plans, and they like it, they've had say one of these plans for 10 years, 5 years, change is often tough for Medicare beneficiaries, especially if they've had a plan for 10 or more years, right? So they like the Medicare Advantage plan, they're coming off the Medicare supplement. Ms. Smith, my clients that have Plan G or who have had Plan G, not only are they paying a premium every single month, But just like you said, the first time you go to the doctor, you owe 100% of that doctor office visit until $226 is satisfied. You're paying $200 a month. The first time you go, you got to pay out 100%. That's why you didn't like it, right? And this is some of the things that my clients would share with me. Now, it could be not only a Medicare Advantage plan, guys. It could be, hey, we're coming off a Plan G into a high deductible Plan G, or maybe a Plan N, right? So think about that. And a lot of times this is coming off a supplement into a Medicare Advantage plan. Clients that have high deductible G, Ms. Smith, have shared with me. I know you've had this plan for a couple of years, 5, 10 years now. The reason why they get off of it is because it pays nothing. For the first $2,700, it doesn't do anything for you. I've had clients tell me, Gabe, this plan didn't do anything for me. So let's get with this Medicare Advantage plan where there's no deductible and co-pays from $1, right? Plan F, I know you've had this Plan F for a long time, Ms. Smith, paying $300 a month. That's a lot of money to get 20% of a doctor office visit covered, right? Every single month. And it does have even lower retention than before because those premiums are going to continue to go up at a faster rate than others. And then Plan N, my clients have had Plan N, Ms. Smith, they've been charged at 15%, excess charge. And there's no max out of pocket with a $20 copay. So it's all on how you deliver it and how you close out that sale, how you close out them coming off of a plan that they've had for a while, right? They've had their toes in the water. They're looking to make a change. They feel good about it. You're trying to give them some more feel goods, right? Potential med-sup objections, med-sup to MAPD objections. I don't want to pay anything. You already are. You already have copays, right? What if I get cancer or chronic disease? I cover the same chronic illnesses. My father-in-law has stage 4 cancer. He's got a Medicare Advantage plan. Yes, he gets his max out of pocket. He's hit his max out of pocket going on 2 years in a row now. It's only like $3,400, but he likes it. He's treated the same. I don't want to owe the max out of pocket, right? Whatever your max out of pocket is in the area you're selling, you're not going to owe the max out of pocket if you go to the hospital. You're just going to owe the copay. Am I treated worse with this plan? No. You're put in the same room, same hospital room. You're not going to be put in the janitor's closet at the hospital. You're treated the same. The more I pay, the more I get. So sign me up for the most expensive plan. We know that's not true, right? I need a new prescription plan because this one is getting too expensive. This, in my opinion, was a classic signal that they're trying to create room in their budget for the increase in their med-sup premium. So always ask them what their med-sup premium is. What are they paying per month in the med-sup? Because it could be an opportunity to put them on a less expensive med-sup with another carrier, such as Humana, or a Medicare Advantage plan. So again, know your opportunities. This helps you turn on a dime. Supplements do give more flexibility in the future. Keep that in mind. There's nothing wrong with sharing that. Financial exposure is lessened, but only a really bad year. Very easy transition into Medicare network-wise. Age-ins also include those who qualify for Medicare prior to 65. And CF and high deductible level are still available to those who have Medicare prior to 2020, even if new to Part B in 2023. So know your why. I think that helps. It's helped me significantly out there. It helped me with the work with assisting folks and developing that referral pipeline throughout the year. Understand your why. Why not, and why would I? So if you wrote down a plan, say if you wrote down a HMO that you absolutely would not write yourself on, why would someone want that plan? Are you feeding into your client's bias because they don't like a particular plan that you don't like? We can't do that, okay? So if you walk into a home, you sit down at that kitchen table, and the first thing they say is, I don't want an HMO. I don't even want to talk about an HMO. Are you feeding into that? Or are you being genuinely curious to say, all right, talk to me a little bit. What have you heard out there? You could find, just like I did, you could find that the HMO suits them great. And at the end of the appointment, you're signing them up for the HMO. Right? But just because you don't like a particular plan doesn't mean you feed into their unconscious or your unconscious bias on that. Diplomatic, strategic advisor. That's what we are. I don't know that we're educating, right? I think we overutilize that. way too often. It's not a teacher-student scenario. It's a strategic situation. We're strategizing with our clients. I know that we're teaching them something, because if you do a Medicare 101 presentation in front of 10 people, 20 people, after an hour long going through the A, B, C, and D and all the, the Medicare information, more often than not, they're not going to remember half of what you talked about. But what they will remember is that they liked you in those first 5 minutes. They will remember if you were more strategic than educating, right? So it helps them, and more than likely what's going to happen, you're going to get a phone call from a person that attended your Medicare 101 seminar, and guess what? You're going to go sit down with them and go over everything again, because they're not going to recall a lot of that stuff, right? So our Medicare Achieve supplement, I like to cover the supplement information. We do have Medicare Advantage plans all across the country, and each one of them are a little bit different throughout the country. So we're going to cover what's the same. Our Medicare Achieve plan, $2 discount per month if they do auto discount. We do have historically lower rate increases than other carriers, 2.6% year over year, and then our MIPA is 3%. No policy application fees, strong retention and NPS scores. And we currently have the nation's most lucrative third quarter bonus. I have not changed that since the second. We rolled it into the third quarter. Most lucrative bonus out there, $325 for underwritten policies and $150 per open enrollment policy. And there's no minimums. The Achieve is our most competitive Medicare supplement to date, industry leading in many areas, very competitive for switchers coming up in other carriers. So I encourage you to quote them on Humana's supplement. If they've got XYZ carrier, quote them with Humana. They get a 12% discount if they live with anybody over the age of 18. So they don't have to have a Humana plan, and the other person in the house does not have to have a Humana plan in order to qualify for that 12%. It does not include silver sneakers. Throughout the country, we do have another supplement line that does include silver sneakers. Reach out to your broker manager to find out which one that is. So the Achieve or our other line of supplements, you can, your enrollment options are pretty fluid there. Our eHub, you can do a text signature, you can do eSig, digital, or T-Sig. Same goes with FastApp on eSig, digital, and T-Sig. And if you have to do a paper app, upload it through Vantage and Service Inquiry. It's a very efficient, fluid way to do it. Fax machine is still available. It was one of those things that was created back in the mid-1800s, so it's just an antiquated system. If you're in Texas and you do a paper app, you must have every document signed and filled out, even if it does not apply to your client. So there's a guarantee issue document in there, right? If your client's turning 65, they still have to sign that guarantee issue document, even if it's not a guarantee issue situation. So keep that in mind. All right. So thank you, Jetter Company and Insurance Marketing, for having us today. Again, you can obtain the recording of this through them if you'd like, and get some more information on Jetter as well.
Yeah, thank you, Gabe. That was a great presentation. I think we can all say that we walked away with a little information that we did not come here with. I do want to open the floor to any questions before we're done. If anybody's got any questions, make sure that we get those in the chat here. While we wait, I do want to remind everybody one last time of our AHIP reimbursement. We reimburse up to $125 to anyone who is appointed through Art Jetter & Company. If you go through a certain carrier, such as Humana, you can get up to a $50 discount. This will help ensure all of your money is back when you write at least one Medicare Advantage policy or 3 prescription drug plans. Make sure you keep your certificate and your receipt so you can send us a copy to ensure your reimbursement. Also, after this webinar, you should get an email with a survey. We greatly appreciate anyone that will fill out that survey and get that back to us. We don't have anything coming in just yet. I got one last thing here. Anybody with friends, family, dipping their feet into the insurance world, give us a call and we can help anybody get off their feet. We're a full service FMO that works with independent life and health agents. So that's all I got. We'll give it just about 30 more seconds here for some questions. Actually, real quick, while I got you, Gabe, can you help the agents figure out how to do AHIP training through Humana?
Sure. Yep. They would they could access it through Vantage, and I can show you on my screen if you want to take through a demo real quick, if you'd like.
Yeah, that would be great.
Okay. Oops. Let's see. So you're going to sign in to Vantage here, top right-hand corner. This is a dummy account, so this is the portal here. And Market Point University is where you're going to go. You can actually click on this link right here, get certified, recertified. Go through Market. This is probably the easiest link right here. So click on this link. Now, it doesn't open up until June 27th. Keep that in mind, but you can click right here, get certified or recertified.
Perfect. Thank you so much. I got one question for you. Please go over the benefits of the Achieve Med Sup one more time.
Sure. Let me pull up a slide here real quick. So the Achieve, we have a $2 per month discount. They do auto draft, and a 12% discount if they live with anybody over the age of 18. That does have some value-added services, well-timed hearing, vision discounts, others, with the exception of every sneaker. Let me pull up one more thing for you. Let's see if I can get there.
And they added, where do we find information on those value-added benefits?
I'm pulling that up right here. I can email that to you. Should probably include that. We just got this the other day or a couple weeks ago, so I probably need to add it. So you have, this is a document here. It is member-facing. It's approved for member-facing. They can share this with their client. It should be in the packet as well, in their Achieve packet. So here's the Welldyne Humana First Nurse Advice Line. Humana at Home. Hearing discount, they have to use True Hearing to get the discounts on their hearing aids. Those high-quality hearing aids, some of them are Bluetooth enabled. If they don't want to go through True Hearing, they can use. Yes.
I would add that if you hop back over to Vantage, they can find all the PDFs, including this, under the Sales and Marketing tab. So if you're wanting any more information about Achieve, you can go to Vantage, Sales and Marketing tab, and right there.
On this link, and you can save these documents to your desktop if you like. Bring the OPC in the app packet. Maybe we can have folks post in the chat say we're going to go out and sell some high deductible Plan G. How many of you were sold on that high deductible Plan G today? Here's the see the tabs down below where you can click the links here for Achieve, and it's going to pull up all the states and the app packets and the OOCs.
All right, well, that's some great information. I think that will wrap up all of our questions for today. There is a couple questions I do see out there for the people that we didn't get to. I will make sure that a senior health specialist reaches out to you and we get those answered. Other than that, thank you guys so much for joining. Gabe, Courtney, thank you guys for helping host this, and we will talk to you guys soon.
You got it. Thank you. Appreciate y'all.
Thank you.
Thank you.